Welcome back to the Junius Maltby channel. I want to share with you guys an article I discovered this evening, read about it, talk about it, and continue the conversation that we are having here on the Junius Maltby channel. Why I am buying gold for portfolio right now by manager of £1 billion of assets. Articles by David Thorpe, October 29th, 2015. Gareth Lewis, Chief Investment Officer at investment manager Tilney Best Invest, has revealed the reasons behind his decision to buy gold for the first multi-asset funds, which have assets of £1 billion. Lewis commented, "We have been keen observers of the growing market distortions created by global monetary policy. With central banks losing control of the macroeconomic environment, we believe policies such as QE will become discredited." They have a grammatical error in there, it looks like. He continued, "As a result, we have reduced equity exposure within our MAP range of funds and in its place introduced a position in gold for the first time. Gold has a low correlation with other risk assets and serves as a form of insurance should all the world's central banks spark a round of competitive currency devaluation by loosening monetary policy further. In a world with low and even negative real interest rates, the opportunity cost of us providing this protection is low." So you see here, we're going to take a pause, take a break, interject some ideas and thoughts here. This kind of goes with the theme, with a shift in the weather patterns. Look around you, this is all part of us paying attention to things that we're seeing. We talked about in the last video, the article I shared with you guys regarding that internet mega company, Overstock.com, and how they were, in a way, preparing for economic uncertainty for themselves and their employees. That's in the United States. And now you're looking at fund managers, portfolio managers over in what looks like England, doing similar, moving assets into gold. We're looking at really low gold prices right now as far as what it takes in the amount of currency to acquire an ounce of gold. And we're seeing things, uncertainty in the global monetary policies. We're seeing QE programs across many different countries. In the Eurozone, we've seen uncertainty in Greece. We've seen just a lot of indicators that the economy might not be as healthy as we're led to believe. And so, if you have your finger on the pulse, is what I'm trying to say, you can see and feel that something's off a little bit. And hopefully that reassures a lot of you guys in your decisions to continue stacking, to be a buyer of metals. You're doing something, think of it this way, you're doing something that managers and owners of major companies are doing, whether it's that guy like the guys at Overstock. You're doing an activity or making a decision that's falling in line with the decisions certain portfolio managers are making to maintain their assets and take care of their customers. So that should make you feel pretty good when you look at your little gold stack. Then again, none of us, are managing billions or even millions or even hundreds of thousands of dollars. Some of us, we're managing dollars, single dollars, individual dollars, And don't feel bad if you don't have gold. If you have silver, that's great. If you have even if you have a tenth of an ounce of gold, a 20th or a gram, that's something. That's something. That's resisting inflation and protecting your wealth somehow. Every little bit helps. Moving on here, he says, turning his thoughts to how he has been investing in gold, Lewis remarked, "Our favored route to access this commodity is via a physical gold ETC, and we have chosen to use the ETFS physical gold GBP ETC PHGP from ETF Securities, which is a low-cost and liquid investment option." It looks like they're moving into a more physical route. Now, whether that's just through paper contracts they could cash in later and get the physical, I don't know the details of it. I gotta say I'm ignorant as to what route they're acquiring and what type of gold they're acquiring, but it does sound like it has a close connection to physical gold. And you all know my thoughts on getting physical. Paper contracts, IRA, Roth gold, anything that you can't hold physically, in my opinion, okay, this is my opinion, and I'm entitled to it, you're entitled to hear it, is worthless. If it's not physical gold, if you can't hold it, touch it, sniff it, smell it, melt it down and make it into whatever you want, exchange it, barter it, carry it, travel with it, hold it, bury it, lock it up, you name it. If you don't have it in your hands, you don't have it. Because that's paper, and that's a little bit different than gold. I've got a video I made years ago on my thoughts on paper gold versus physical gold and the amount of oversold contracts that exist out there. And it's just common knowledge that paper gold, that market is heavily manipulated, and one day when people rush in or try to make claims and take delivery of physical gold, some of those people are going to be very disappointed when they find out there's no gold for them to receive. All right, let's conclude the article here. Lewis concluded, we have become increasingly cautious on the prospects for risk assets of global growth, as global growth has slowed despite the weight of stimulus. The risk of policy error is growing as authorities across the developed economies struggle to stimulate demand. We have been tactically underweight both equities and high yield since the summer. The move to include gold completes our phased move to de-risk our portfolios. That's a very important last paragraph of this article. This guy's not, and I hate to use the term, you guys know, he's not a gold bug. Or like we like to say here on this channel, he's not a gold hawk like you and I. He's not a gold hawk. This is just a guy that manages over £1 billion. So what is that? Almost $2 or $3 billion in assets. And he's thinking logically. He's looking at facts. He's doing this in what I would almost consider a pseudo-scientific way. He had a hypothesis. He's taking in information and data. He's digesting it, computing it, and coming up with what he perceives as a solution to a potential problem. And that solution is, de-risking his portfolio by acquiring gold, because he's, and there's so much you could talk about, just the, he's talking about the risk of policy error growing. That's something we talk about here every day. And you've got authorities across developed economies struggling to stimulate demand. I find it interesting, the line, growth has slowed despite the weight of stimulus. Yeah, there comes a point where, governments can only spend so much fiat and have so much effect before they absolutely destroy and erode the economy. And it's just like Weimar Germany, and we've brought that up dozens of times. You've seen the pictures. We've talked about it here on this channel, and it's been discussed at length. Hyperinflation, inflation, and all of that, purchasing power, and so on. But there you go. That's a pretty heavy-hitting little article there. It's just one article. It's just one little piece of news and information that we can add to our toolbox of knowledge and data, and to just refer back to as more information that strengthens, I would say, strengthens our position and strengthens the reason we're doing what we're doing. All right, stay strong, stay safe, keep stacking, be a good peasant, work hard, pay your taxes, and put your shoulder into the plow, and do not forget to render unto Caesar what is Caesar's. All right, have a good day. Thanks, take care.